Ladies and gentlemen, fired is the word that's going to sum up today's show because Bruce Linton, the head of Canopy, got fired because Constellation Brands wasn't happy. And what does this say for my shareholding in Constellation Brands itself? I'm going to talk about RSPs because I've kind of confused you guys about it and I want to simplify it just really quickly. And we're going to break down this six-figure dividend portfolio on top of that. Lots going on this Saturday, so let's jump right in. Welcome back, my passive income investors alike. Today we have so much to go over. It's Saturday. I didn't plan on making a video today. I've been caught up in shows outside. I'm sure you can see by the redness in my face. I got a lot of sun this morning. But I thought it was really important to make this video because only recently has Bruce Linton been fired from Canopy. A lot of you have been asking me questions because I haven't really been clearing how an RSP works, and a lot of you don't seem to understand yourselves. From a few of the comments I found really confusing and odd. And then on top of that, guys, I'm going to break down a ton of other stuff going on in my dividend portfolio. But we'll start with the RSP. I just want to get that out of the way real quick before we head over to my computer. But an RSP, guys, a registered retired savings plan. I keep telling, when I talk about it, I kind of loosely discuss the terms behind it. And when I say, I've said a lot that you can't just withdraw from an RSP. You can't pull money out of it. And a lot of you tried to correct me and said, actually, you can pull money out of it whenever you want. This, that, and the other. I had somebody telling me you don't even get penalties on withdrawing it. And a lot of you, I found, don't really understand what an RSP is. It is a registered retired savings plan. And all it does is if I make money today and I put it in there, it defers me from paying tax today. And when I'm 65, I can withdraw on it, getting tax benefits. But if I withdraw on that early, I can see up to 20% taxation on the money I'm withdrawing. I think it's on like even up, as soon as you pull up 5,000, if you have that much in the account, the percentage goes from like 10% to 20%, plus there's withholding tax and a lot of other fees that come on top of it. You could literally lose 40% of your wealth withdrawing on an RSP early. It is highly advised against, and it's just something you should never think about touching. So don't even open the account if you aren't comfortable knowing you're going to be holding on to that at least until you're 65, because trust me, you do not want those penalties. But moving into the more important news today, guys, I want to talk about Canopy Growth Corp. The company I made I made around roughly $20,000 on one trade with Canopy years ago. It was one of my best trades ever, and I kind of wanted to mitigate my risk, so I ended up buying into Constellation Brands. Many of you know I own Constellation Brands. When we head over and look at the portfolio, we'll see this. I'm going to break down an interview as well, but I just really quickly want to give you my opinion, and then we'll go over to the computer. But my holdings in Constellation Brands, you'll notice that the Canopy hasn't moved that much. I'm shocked, to be honest, along with Constellation Brands hasn't moved that much, and I'm getting a little hesitant. This put me on edge, but it really reaffirmed all the stuff I've been talking about. And if you don't understand, I've kind of removed some of my my marijuana related videos because I'm trying not to get tagged by YouTube. But in the past, I have talked constantly about how the media misrepresents what these companies are doing. These companies, before marijuana was even legal, had metric tons of marijuana waiting to flood the market. But the government, if you look at the supply chain, the government was the only supply chain in the beginning, and man, were they expensive. And they were saying they couldn't keep up with the demand. They couldn't keep up with the demand. And it wasn't that they couldn't keep up with the demand. It wasn't they couldn't package it the way the government wanted it packaged and get it on the shelf so someone could buy it fast enough. Now, every company under the sun, including Hexo, all these Canadian companies, Afria, a lot of people are asking me about, and they're like, what do you think about these companies today? And nothing's changed. Everyone's like, yeah, but they're making drinks. They're doing this. They're doing that. Do you know why they're making drinks? Do you know why they're trying to focus on medical and get into like extracts? The reason they're doing that is because this shelf life is a lot longer. These companies don't know what to do with the weed they have. The government isn't allowing them to funnel it into the market because the government's mitigating the supply chain. In the beginning, you could only buy from OCS or any other government retailer, and there was only one, and you could only buy it online. You couldn't legally buy it in any dispensary or off any individual person in Ontario. Now, move a little bit farther ahead, we allowed 20 stores in Ontario to open, and now we're going to allow another 20. So there are only 40 stores just being introduced now. And if you look in the past, guys, MedMen wanted to compete here. They weren't allowed. If you look at how the regulation has been just punching these companies into the ground, I am shocked that the stock values haven't crashed. I'm honestly just so enamored that I just feel like there's a lot of ignorance in the marijuana market right now, and honestly, if I was into shorting, I would put a little bit against that market because it is years out from being anything worthwhile, and everybody that I know in Canada either buys from illegal dealers or they're growing their own, and even the government website tries to promote you to just grow your own, which doesn't help the stocks or the companies or employees. It just blows my mind how useless the government is. Anytime the government gets involved with something, guys, it takes years for it to even work itself out. So don't be in a rush if you own marijuana stocks. Leverage in slowly over time, guys, because I think there's going to be many dips and buying opportunities in the future, my personal opinion. But let's head over. I just want to show you a quick opinion because, man, I felt so bad when Bruce got fired. I thought he was doing a great job at Canopy, and I don't think it's his fault. The numbers sucked, and I can just tell that Constellation Brands was not happy with the way legalization went. And the only reason CEOs get fired is literally for two reasons, guys. Somebody else wants their position, or they didn't do their job. And 9 times out of 10, it's because they couldn't fulfill what they promised to a shareholder, especially one that has the majority voting rights. So let's head on over to my computer. We'll look at this interview real quick, guys. It gets me all excited. I love the marijuana industry. I used to be really involved in it. It's my specialty, in my opinion. But let's just head on over, guys, and then we'll take a look at the 6-figure dividend portfolio and update you with all the changes that have been going on as well. All right, ladies and gentlemen, here is the interview. Bruce Linton. I don't know why I'm bumbling on his last name, but this interview sums it up, and he's such a nice, easygoing guy. I honestly thought he was one of the best CEOs, and there's a lot of people selling Canopy just because he's not in it anymore. But just take a quick listen. I think this is a really important video, and it kind of gives his own opinion on it as well, but let's just take a quick
peek. To be clear, have you been terminated, or did you step down on your own? And
I was terminated.
Okay.
So you were fired.
So
there's a lot of words for it. Was that Kevin?
Hey,
yes, it's Kevin.
Hey,
here.
Bruce, there's life after firing. Trust me, okay? You're going to be just fine, okay?
Bruce, I want to go back. You are such a hammer.
Kevin was one of my first interviews in the sector, and because it was Kevin and he was expecting me to look like a hippie, I wore a 3-piece suit, and he just sat there looking at me going, I don't even know what this guy's about. I'm just going to try and wait till he gets off this segment. But how are you, Kevin?
Very good. And I want to ask you a question, Bruce. What happens next? You are a hammer in the Canadian market for raising capital. You are the industry and were for years. Where are you going? What are you going to do?
Well, I've already gone to Costco and filled 1 car with gas this morning. I got a long list of important stuff like that to do, and I would hope by the end of the day I've figured out what's up next, and it won't be in cannabis in Canada, but there's a pretty big world out there.
But, Bruce, take us behind the scenes, because clearly, and this has been a surprise to the market, to investors, to analysts, what happened here? Give us whatever, I imagine, your vision of the future of this company was and how that must have differed with the board.
So I think the company is in great shape because we did a couple of things. One is when we hired really great people, we loaded them up with long-term employee stock option programs. So there's a bunch of great people that are going to continue to work through. The transition will be a bit odd because nobody, including me, was necessarily expecting it.
Okay, I just want to leave it there because he just said he wasn't expecting it. But there's 2 very important things in that segment that you have to understand what he said. He said, there's a lot of opportunity out there, but I will not be getting back into the cannabis industry in Canada, and that would be for one of 2 reasons. That and it throws me off a little bit because his competition is actually in the U.S. Like Constellation Brands, all those companies are U.S. based, and this is the Canadian dealer. But usually, when you get fired, you're forced to sign a non-compete, which means you're not going to compete with those current brands. But honestly, I don't think that's the situation here. I think he got literally fired for not keeping up with the numbers because Canada sucks for legalization, and then following his statement saying, I will, because he doesn't really talk about what he's looking forward to, but I guarantee you he's going to get headhunted by a marijuana company in the U.S. that is preparing for federal legalization in the next 2 years. Everything came down to the Canadian government really just screwing us over, guys. It cost Bruce his job. I honestly thought Bruce was one of the best CEOs I've ever seen, and I was really curious to see how he was going to compete with the Canadian market. And I noticed that he started getting involved with making partial deals with U.S. companies so they would for sure have rights to selling in the U.S. come federal legalization in the USA. I give my good salute. Bruce Linton was one of the reasons I made a ton of money in Canopy, and it's a shame to see him going, and it really is making me debate my Constellation shares, but it's not something that I can, I'll give you a little bit of insight into that. So maybe we'll just hop over into the 6-figure dividend portfolio and we'll talk about why this matters so much to me specifically. But before I do, let's just talk over the generals. Here are the new accounts, guys. I just opened up the brand new accounts. So in here, we can see I've changed a lot. So we have the new RSP I haven't contributed to yet. And you're going to notice the weirdest thing ever is CAD US, and then CAD. So in my managed fund, as I've called it, this is the fund that I have to pay tax on this income here. here, and it's money that I'm not actually allowed to put into USDs because it isn't a registered trading account, whereas your tax-free savings account is, along with your RSP is. And if we head on over into the account, we're not going to look at the RSP because I haven't started contributing to it yet. But with the basic accounts, guys, you're going to notice some major changes. The first thing is my equities have been separated. And this is for very good reason, because this is probably looking way different to you, you subscribers that have been around for a while. And the reason that I did this was one of you YouTubers, and I don't want to get his name wrong, so I'm going to go in maybe after. I don't know if he wants to be mentioned in this or not. Maybe I won't mention him. He comments a lot. He's been a real big help. He's been kind of leading me in a direction and kind of helping me understand some stuff I didn't know. Like, you can open up a US account. And what this basically does is you pay what is called an FX rate, which just means whenever there is Canadian dollars being converted from dividends or from you just buying stocks in the US, you are paying a premium that gets automatically calculated in to the FX, or the exchange rate as it's called. And you're paying premiums every time that happens. So what this allows you to do is it allows you to mitigate it. Now, there is risk with this because essentially all my US holdings you'll see down here, these will pay out in US dollars, but I won't get the conversion rate. So I'll literally get paid with no conversion rates. This will sit in this account in US dollars, and I'll be able to trade in US dollars. So even the Canadian dollar, guys, is up right now. So right now, I'd say is a good time to be buying U.S. companies because the Canadian dollar is up quite a bit on the year here. It's starting to hit some highs again, and now's the best time to do it. But now would not be a good time to be accepting U.S. dollars in Canadian money. So on the exchange rate, I will be getting less money today than I was a few days ago. And it's kind of hard to understand, but essentially when the dollar is down, say at the 73-cent mark here at the lowest it hit, that means when I'm buying, if I'm trading to US dollars, I am paying way more of a premium to get those US dollars. Same vice versa. If the dollar drops again from where it is now and I have US dollars sitting in the account, I will have actually made money on the US money. And when I convert it over, I pay like a mild transfer fee. I think it's like $30, which is a lot, but when you're probably going to be transferring 4,000 or 5,000 at a time. It's not like you're going to be doing this $100 at a time. But what this would allow you to do is actually play the dollar exchange rate. Now, you can get hurt because, say, you keep it in US and the dollar keeps going up. Well, now you're gaining value in Canadian and losing money in your US. But it's the game you're trying to play. But I found that this would give me more mitigated risk. It'll allow me to choose when I trade the money instead of just automatically getting Canadian dollars and Canadian dividends. So I want to tell you why I was getting screwed. I would take dividends in Canadian dollars, and then they would automatically get converted to from US to Canadian on the dividend. And then I'd buy a US stock in which it would go from Canadian to US again. And I'd be paying conversions both ways, which is really dumb and stupid. So this is going to help mitigate a lot of that. And thanks a lot. I don't want to give you too much of a shout out. Maybe we can go to the YouTube channel and I can just give you a quick little shout out here if we open this up and let you guys see. His name's, I'll just say Rochester3. I don't even think he's a subscriber. I think he just sees me post on stock forums, and he kind of gives me a shout out and helps me out. Like you can see here, it says you don't pay taxes on REITs and TFSA. Good to know, because I mentioned that I did not know the full tax implications, but he knows more about this than I do. I can tell he's a little bit more experienced than I am for sure. Into too much. Moving on here, let's take a look at the other accounts. So the accounts right now sit around $112,000, $200 or $300, whatever you saw in the beginning there before I logged in. And we can see, guys, what's going on here with Constellation, and I am shocked. I am up 13% in this position, and I don't know what to do. I'm a little discouraged and confused because essentially, when I bought Constellation, I bought it on the fact that they pretty much picked up, let me show you what happened here. We'll see if I can get this to open. It might lag her a little bit. Let me get in here. So a lot of people are bullish on Constellation Brands. I am as well, but here's my dilemma. I bought this to keep with Canopy. When I sold Canopy Growth Corp, I still wanted to be a part of it, but I didn't want the risk because I knew what was going to happen. I knew the government was really battering up legalization, and I wanted a way to have it long term, but where I wouldn't have to worry as much about the volatility, and that's why I was happy Constellation Brands stepped in. Constellation Brands purchased a huge percentage over, let me go to the 5-year chart because the 1-year chart doesn't show me. I believe it was sometime around the end of, I'm pretty sure, don't quote me on this, but it was in 2017. But it was around the peak. So when Constellation did this massive run into this section here, this is where they were buying Canopy Growth Corp, and they their stock was up so much. And then when the stock tanked because people weren't happy that they were buying Canopy and the markets were just coming down in general, but it was holding up surprisingly in 2018, and then it just came down at the beginning of 19 here. But we can see, guys, that when it dropped, the market cap value that it lost was literally the equivalent of Canopy's growth. It was almost the equivalent of what Canopy was worth and still is worth. And the way I looked at it was you are literally getting this incredible company, Constellation Brands, along with Canopy Growth Corp, but you're getting Canopy for free at the valuation that Constellation sits at. Now, Constellation has the highest margins of any alcohol company out there, from my understanding, especially when it comes to the beer market. They're slowly mitigating out of spirits like wines and things like that. But their Corona, their Modelo, everywhere I go, I love the fact people are constantly drinking those things. And that's why I love holding this stock, because I honestly believe they have a ton of room to grow this dividend. And I want to hold it as a dividend growth stock along with an incredible equity growth stock. Like, look at the 5-year chart. It's just immaculate. You almost double your money every 5 years in this guy, not including the dividend that is recent. The dividend is fairly new to this company, which also adds the added risk that it doesn't have a long-term dividend growth cycle. But I love the fact that this gives me the exposure to marijuana without the risk. Now, my concern is, guys, is where is Canopy Growth Corp's future headed? Because what I'm worried about right now the most is that they're not going to be able to sell over the border. So what's going to happen is I don't even think Constellation Brands is going to see the full benefit of Canopy anywhere in the near future, which makes me debate on how much I want to hold on to these shares for. Obviously, they can pay the debt that they paid for Canopy, no problem, but they're just not Canopy. It's not their fault, which is what I'm trying to get across here. And it's not that the story's really changed, but it's not their fault that this has happened. But honestly, the way the government's treating marijuana right now, I couldn't see myself wanting to be too exposed to any of this. So I'm debating on whether I should even keep these shares. You guys can let me know in the comment section below. But usually I like seeing people that are in the game the longest. Like, who are you going to replace Bruce Linton with? He was the head of cannabis culture in Canada, and he's gone. And it's not his fault that this has happened. So I'm discouraged, confused. I'm going to do some more homework and get back to you on it. But whether I hold Constellation Brands at this point is debatable, because I really want to hold on to the beer companies. And I like the fact that this has that future growth aspect, that if Canopy can work itself out. But if Canopy can't get its shit together in the next 5 to 10 years, and I know Bruce Linton said, it's like he had to say that it would be he thought it would be the dominating company, even though he's not going to be there. It's like he has to say that. He can't batter Canopy after he gets fired. He might lose, like he could get sued. So, I mean, he's not going to say anything bad about the company, but in my eyes, I am so beyond worried right now, because every company is competing under the same funnels. So imagine you have the best product on the planet and you wanted to put it out to your customers, but the government's like, no, we don't care that. We don't care about your products. We don't want you to advertise your products. We don't want you working with Snoop Dogg. No. We're going to make it illegal, actually, for you to work with Snoop Dogg. We're going to get rid of those branded products, and you're only going to be able to sell your product through our store. We get in here, and first of all, the most annoying thing on the planet is nobody actually puts in their legal age. So I don't even know why you're asking this, because I'm just, whoa, what's your opinion? What, after you visit, because you like to complete a short? No, I don't want to complete your stupid survey. I just want to buy weed like everybody else. Yeah, I confirm that I acknowledge the BS that goes along with OCS and government stuff. So let's start browsing. See the way it took like 4 to 5 clicks to get into this website? That pisses me off. Oh, let's look at the website. Backyard bud. Tips to know before you... Wait, I can grow my own weed in my backyard now? That would cost me nothing. Boom! Why am I even wasting my time coming here to look for Canopy's products? According to OCS, I should just be growing in my backyard. All of this stuff is really starting to piss me off. The prices are premiums. Their cheapest products cost more than all the illegal dealers. I mean, look at the prices, are all over $10 a gram. I'm sorry, guys. I get worked up about this because I'm a shareholder in this, and I believe I have the right to be upset with the way this has been done. And it's really making me debate on whether I want to hold on to my shares in Canopy. So that's just currently where I still look, a Hexo product. And look at what a Hexo mouth spray cost, over $100. No, thank you. And you guys can see the companies here. You got Aurora Cannabis. Again, their weeds, they're trying to get the pricing down. But I don't know. Are people buying these? I really don't know. Look at Tangerine Dream. Who's this by? San Rafael. Aurora is probably a company people are more familiar with. So maybe let's take a look at this product. So 7 grams is almost $70, guys. Could you imagine? I don't, like I said, I understand marijuana prices. When I was like a teenager, I remember weed costing on average $200 an ounce, okay? There's 28 grams in an ounce. You guys can run the math, but it is not $10 a gram. All right, I'm going to leave that there. I've spent enough time on this. Let me move on, guys. There's more important things to talk about. I've talked about the dividend portfolio. What I'm going to be doing into the future here, guys, is I'm going to be buying more British American tobacco for sure. Though Altria Group has some exposure to Cron in the U.S. Or the Canadian market here, I honestly think Altria would be a great company. Again, the marijuana stuff, I'm just trying to look past it. It's a great growth vector if things get figured out. But in the meantime, I'm trying to look past it and just focus on specifically, can these companies sustain their dividends? And I absolutely think all of these companies can sustain their dividends, especially these tobacco ones. So it's the only thing I can really feel comfortable focusing on right now. So I'm going to buy more British American tobacco very soon. I'm going to take the shares that I sold. Oh, I don't know if I fully updated you guys on that. I sold some shares in Northland Power. Northland Power has been on a tangent lately. I sold out right over that $26 mark. I think it was right around $26.06 to $26.01 is my selling price. And I got out of this. Not that I got out of a lot of it. I mean, I still have $13,000 worth in this company, but I had almost $18,000. And what I want to start doing, guys, is leveraging back into companies that I want on my tax-free savings account. I mentioned this in my last video. I really want to take these companies, get them into my TFSA, and I'll do it by mitigating out of companies like Apple. I'll do it by contributing to this every year. I'm allowed to add $6,000 a year, which you can see I've maxed out at the beginning of this year, so I can't add any more money to it, but I can collect dividends, and I can start leveraging down in companies that are high-flying. Like as soon as Apple, where's my Apple? Right here, actually. As soon as my Apple gets well over that $20,000 mark in Canadian dollars, which here doesn't look like much. Here it's funny because you're like, oh, but you only have 11,000 in Apple and it's only worth 13. Really in Canadian dollars, it's worth like 17, 18. And once we start hitting that 20,000 mark in Canadian value, I will leverage down in this and I will start buying, again, other companies like British American Tobacco, MO, and really start getting into those companies themselves. It's funny because if you go back to the last video when it used to show these in Canadian dollars, it looked like I had a lot more money. At least it's going to change the way these accounts look a lot because now you're going to see the valuation in US and Canadian, which is going to lower the overall value. And I'm not going to do the conversions for you today because I'd have to convert all of these numbers to Canadian to give you the exact amount. But if you go to the beginning of the portfolio, like I showed you, it shows you the full Canadian value of all your equities, which is right around 112,000 something, which is actually up because the markets have been doing great. Trump's probably up for re-election and he wants to keep the markets high flying and he might want to get back in. I don't know. Personally, if I were him, I'd want to turn around and run. I don't want anything to do with that. But this has been an interesting video, guys. This video broke my heart, but it's the way the world works, guys. You can let me know in the comment section below what you think. It's a Saturday video. It's been a long one. Stay cool. Stay awesome, guys. I'll catch up with you real soon.